on Business Incorporated today. 6 countries in Africa, including Nigeria, get approval from the World Health Organization to produce COVID-19 vaccine. Rwanda hikes rate by 0.5% for the first time in a decade. R8.8 billion invested in South African automotive manufacturing sector in 2021. Welcome to the final episode of Business Incorporated on Channels Television for this week. I'm Ini John Mekwa. We'll begin as usual with market numbers in Africa. We start seeing most of the African markets in the green, of course, but of course remember that EGX of Egypt closed yesterday as they are not open today. South Africa's GSA index traded positive, also 0.33%. That was at intraday. And Nigeria's NGX was mildly up 0.03, recovering a bit from yesterday. And elsewhere, of course, the EGX declined by 0.29% at the close of trading yesterday. It's a different picture for markets in the Middle East, where all the markets we track were in the red zone. The UAE Abu Dhabi index posted the highest decline of 0.57%, while the Dubai index was down 0.09%. Elsewhere in the region, the Qatar index was not left behind the drawbacks as the market dropped 0.08%, while Saudi Arabia's market was 0.15% lower. Going to Europe now, a lot seems to be going on with markets reacting to the uncertainty in the Russia-Ukraine conflict. We have Stephen Beardsley now joining us from Berlin to tell us, Stephen, what's the mood among investors with all the tension and the uncertainty around Ukraine and Russia?
Well, the past few days have been driven by ups and downs in European markets, especially when you look at commodity prices, think natural gas, think oil, and when you look at share indexes. Investors really following the course of events over the past few days. There was relief at first amid signs of de-escalation, but then that gave way to more concerns yesterday as we saw that, in fact, Russia was perhaps not taking troops away from its buildup, but could have even been stocking them up along the border with Ukraine even more. And then there was an outbreak of violence, additional violence in eastern Ukraine. And so as those fears rose, markets reacted yesterday. Today, there seems to be more hopes for diplomacy. That is the situation on Friday, leading into early trading. It's worth mentioning here the consequences of a conflict would be carried out across the global economy, especially because of those fuel prices, because of oil prices. And so, even looking at the G20 conference going on right now in Bali, the stated focus there on the agenda is about debt levels rising because of the pandemic over the past few years. But the meeting began with a warning that a conflict in Ukraine would have ripple effects across the globe.
And away from that, well, not too far away from that, gas prices remain high. And the German parliament is now talking about measures to bring costs down. What can you tell us about this?
Right, a measure being introduced in Parliament today would provide cash relief to households that are already receiving some sort of living subsidy. Now, heating prices are going up across Europe and in Germany. There are two reasons for that. One is that in Germany, since the beginning of last year, there has been a CO2 tax put on heating costs, fuel heating costs, which account for a number of heating systems in Germany. That's raised the prices, especially for renters. The other is, of course, that dynamic we've seen with fuel costs, commodity prices across Europe and across the globe right now. And so that's leading to debates about what exactly can be undertaken to bring those costs down. And when you look at the global dynamic of rising natural gas prices, rising oil prices, there's not much that governments here can do except for provide that cash relief. On the other hand, when you look at the rise in costs that's due to climate measures, there is more discussion about how to fairly divide that. For example, amongst building owners and those who are renting. You have to remember that here in Germany, there are many, many more renters in big cities than there are owners in many cases. And so they want to make sure that that pressure doesn't fall too much on renters. Remember that setting aside the crisis of the moment, which is in the Ukraine, the climate issues, climate measures here in Germany are a big focus for this year. So you're going to see more of these measures that are meant to both raise the cost of the use of some energy, but also provide relief for those who have to face those higher costs. So it will be an interesting dynamic over the next year.
Interesting, and also interesting is the plan for new pandemic relief measures to help businesses and employers.
Well, the Omicron wave does seem to have peaked here in Germany, according to the figures from the last few days. However, case numbers are extraordinarily high, and there is still a lot of economic damage. The measures that one measure that's being introduced today would extend what's known as short-term work here, and that is a subsidy paid by the government to workers at employers or at businesses where basically business has fallen off suddenly due to a sharp decline in demand. So think, for example, restaurants where they face new closures, or auto producers where production lines have been closed due to corona measures. So those are going to be extended more than likely into the summer. And then also there's talk about new measures to provide help for parents who have to stay out of work because their children can't go into daycare. And so those measures have been very popular. They've been extended several times, and they fit with the general sentiment here in Germany, which, going back to the beginning of the pandemic, looking at the finance minister at the time, it was a man named Olaf Scholz, and he famously said that Germany, which is traditionally very prudent fiscally, would pull out a bazooka to answer some of the challenges that the corona pandemic had raised, and that it wasn't afraid to spend. It's had some of the more generous benefits compared to a lot of other nations. Olaf Scholz is now Chancellor of Germany, and those efforts to really soften the blow, the economic blow of the pandemic, seem to be continuing under his chancellery.
Well, Stephen, thank you so much for the updates. To enjoy your weekend. We move to the UK now. In some parts of the UK today, schools are closed, train lines and flights have been suspended, and that's because of weather forecast showing that Storm Eunice may hit at any time. Juliana even has to report from home. Hello, Juliana. How is it looking at this time?
Good afternoon, Innie. Not great. The entirety of the United Kingdom at the moment is currently being battered by really dangerous, strong winds of up to 100 miles per hour. About an hour ago, I actually tried to put the bin outside, and I was swiftly met with flying branches. So it's very, very dangerous and pretty severe. It's been described, this Storm Eunice, as the worst storm to hit this island, because it is an island, in about 30 years. The Met Office very late last night issued two red warnings. This is, I think, the worst warning we've had for London and the southeast in particular. The Mayor of London, Sadiq Khan, as well as the Prime Minister, have asked millions of people to heed the warning and to stay at home. If there is a red weather alert, that means there is a risk of flying debris, loss of life. There's lots of pictures circulating social media, as you'd expect, showing really huge lorries being turned over. There are bridges that have been closed in the country. Of course, this is affecting flights. We know this is the latter stages of the holidays for some families who decided to go away. We know that British Airways, EasyJet, the Dutch flagship carrier KLM, they've all cancelled flights. There are no trains going in and out of the southeast or southwest of England. So yes, I know Brits do like to talk about the weather, but in this circumstances, it's certainly needed, because I can testify that it is really dangerous, and we're not expecting it to reach its peak in London until about 2 o'clock, 3 o'clock this time. We're just an hour behind you, Innie.
Yeah, well, so how far out? Do we still have trading going on in the market with all of this?
We do have trading. Gosh, it didn't even take a pandemic to stop the traders. So yes, investors are still trading. We discussed this morning, well, I discussed it with Laddie, about the really robust retail sales data that was released by the Office for National Statistics, showing that for the first time, retail sales are back at pre-pandemic levels. So that's cheered investors as we head into the weekend, particularly as there's still this geopolitical tension on the border of Ukraine. So the FTSE All-Share is up. It's up by 0.17%. The FTSE 100 is up by 0.23%, and the FTSE 250 is up by 0.07%. In the currencies market, The British pound is currently up against the US dollar by 0.02%. It's also up against the euro by 0.09% and up against the Japanese yen by 0.32%.
And, a new collaboration, I would say, with the UK, talking about supply chain disruption, which has been a buzz phrase since the outbreak of COVID-19. Now, some countries, UK just joining them now, hoping to achieve reduction of prices, of supply chain disruption. What can you tell us about this?
Yeah, so this is a collaboration of the Five Eyes network. So this is the UK, US, Australia, New Zealand, and Canada. They already work together, but they've been listening to businesses who have complained about supply chain issues, and now they've decided to have their regulators join forces to make sure that they tackle this. This is an issue, as you said, that we've been discussing for the past couple of years, but small to medium-sized businesses, which are always the engine of any economy, have said that some retailers are charging tenfold of what they would have charged pre-pandemic, and of course this has a knock-on effect for the rest of the economy. So they are taking this seriously now to see whether or not any anti-competitive behaviour has taken place, and this is across 3 sectors, including retail, agriculture and manufacturing.
Yeah, thank you so much, Juliana, and do have a great, and try to stay safe with your family, obviously, in the midst of Eunice and any other dangers.
Thank you. Thanks.
So let's go to Asia now. Shares in Asia Pacific were mixed on Friday as investors in the region continue to assess the risk from simmering tensions between Ukraine and Russia. Japan's Nikkei 225 shed 0.41% to close at 27,122.07, trimming losses after declining more than 1% earlier, while Topix index dipped 0.36% to almost 2,000. Over in South Korea, the Kospi ended the trading day a little change at 2,744.52. Mainland Chinese stocks closed higher as the Shanghai Composite gained 0.66% to 3,490.76, and the Shenzhen Component climbed 0.27% to 13,459.68. Hong Kong's Hang Seng Index dropped about 1% as of its final hour of trading. In Australia, the S&P AX 200 closed over 1% lower at 7,221.70. MCSI's Broadex Index of Asia-Pacific shares outside Japan traded 0.45% lower. The ongoing Russia-Ukraine crisis is at a pivotal moment, with Kyiv accusing pro-Moscow separatists of attacking a village near the border. In the U.S., stock futures edged higher in overnight trading Thursday following the Dow Jones Industrial Average worst day of 2022 as investors dumped risk assets amid geopolitical concerns. Futures on the blue chip Dow were up 0.35%, S&P 500 futures gained 0.45%, Nasdaq 100 futures edged 0.51% higher. Well, Wall Street suffered a steep sell-off yesterday, with the Dow falling more than 600 points for its biggest day drop. We have our correspondent Maria Bird now to give us details of yesterday's trading.
The U.S. stock market had a rough day on Thursday as the Dow Jones was down 1.8%, the S&P 500 down 2.1%, and the Nasdaq down by 2.9%. It is clear that the Russia-U.S. tension at the Ukrainian border is creating a major challenge for the stock market. Also, the looming high interest rates that the Federal Reserve may have to put in place sooner than later. The U.S. stock market has definitely seen one of its worst days in 2022.
Yeah, not a very good day for U.S. stocks yesterday, but we hope they recover really soon. But we'll take a break now. When we come back, we have a lot of stories for you from the African continent. Do stay with us. It's Business Incorporated on Channels Television. Welcome back. You're still watching Business Incorporated here on Channels Television. Well, some good news coming to the continent at the European Union African Union Summit in Brussels. The World Health Organization has announced the first 6 countries that will receive the technology needed to produce mRNA vaccines on the African continent. And they are Egypt, Kenya, Nigeria, Senegal, South Africa, and Tunisia. They all applied and have been selected as recipients. The global mRNA Technology Transfer Hub was established in 2021 to support manufacturers in low and middle-income countries to produce their own vaccines, ensuring that they have all the necessary operating procedures and know-how to manufacture mRNA vaccines at scale and according to international standards. Primarily set up to address the COVID-19 emergency, the hub has the potential to expand manufacturing capacity for other products as well, putting countries in the driver's seat when it comes to the kinds of vaccine and other products they need to address health priorities. Well, still talking about vaccine production, Ghana, Rwanda, and Senegal have partnered with German biotechnology company BioNTech SE to fill, finish, and package BioNTech mRNA vaccines in Africa. This is the first step in the chain of domestic vaccines production, which is expected to improve vaccine supply on the continent. BioNTech SE's approach to this project is to establish scalable vaccine production by delivering turnkey mRNA manufacturing facilities based on a container solution. The model production facility, known as Bound Container, consists of 1 drug substance and 1 drug product model, each built of 6 ISO-sized containers. And we move away from the vaccine production to what's going on in Rwanda. And we see that for the first time in 10 years, the National Bank of Rwanda has unexpectedly increased its benchmark interest rates for the first time, with inflation threatening to go above the target this year. What does this mean for the economy? And we see that food inflation is a major factor in this. Well, we have joining us to have this conversation with us now from Kenya. We have Ike Ihiagwam, a regional director for East Africa with Augusto & Co., sharing his perspective. Good to see you or speak with you, Ike, even though it's virtually. Good afternoon.
Good afternoon, and thank you so much, Amy.
Yeah. So going through the decision of the MPC, we see a major contribution here, a major factor considered is food inflation. But what's driving this food inflation at this time?
First of all, global demand is growing faster than supply due to the pandemic, and it becomes more pronounced for landlocked economies like Rwanda. The significant pressure from domestic due to low agricultural productivity and also imported food costs owing to the pandemic. What we've also seen is that inflation, which increased by 4.3% in January 2022, up from 1.9% in the previous month, was driven mainly by food. And the food we're speaking about here is staple food. We're looking at bread and cereal, growing by about 2.8%, both local and imported. Fresh products also growing about 2.2%, and transport prices growing by 4.3%. And the transport prices are being fueled by the rise in price of crude oil and also the resultant impact from local energy sources such as charcoal and firewood. But what we also see is that supporting this high food inflation is climate change. It has impact on weather and seasons in Rwanda, and that has affected farm produce. One of the research done by the International Fund for Agricultural Development, IFAD, notes that the impact of climate change, such as increasing temperatures and greenhouse gas emissions across the regions in Rwanda, if not properly stemmed, could actually impact negatively on productivity of food crops such as beans, cassava, maize, sweet potatoes. So, it's a major issue, and we think one of the broader solutions could be the government getting technical support and assistance for farmers to adopt new climate resilience practices, because we believe that's the way to go going forward.
And well, from the forecast, it's saying that inflation is even expected to go even higher, I think to about 5% or so. So do we see the MPC hiking rates again?
Well, truth, yes, it's rising, but given the conservative nature of the Rwandan economy, the last time the rates were hiked were 10 years ago, May 2012 precisely.
Yeah.
And also the body language of the National Bank of Rwanda would expect to see rates hiked again in the near term. And the next MPC meeting is scheduled for May 2022. And would expect there to be additional hike in rates because the understanding is the government wants to promote investment, business, and tourism, and wants to show that can operate as a stable environment. So therefore, we don't think that would happen, even though inflation is almost getting to the upper band of 8%, but we believe this will be maintained at the next MPC meeting. But you never can tell. We'll wait and see what would happen in the coming weeks.
Yeah, you can say that again because nobody saw this coming. A lot of people just expected that it would be stable. Well, we have to stop with Ike Ihegwam. Thank you so much for joining us, Regional Director, East Africa of Augustus & Co., for sharing your thoughts with us.
Thank you so much.
So let's move to South Africa. Now, the South African Chamber of Commerce and Industry says that the Trade Activity Index remained in expansionary territory, climbing to 54 points in January from 51 points in December. SACCI says that the January reading showed that when seasonal factors were considered, trade conditions were in an upward trend since October. Sales volumes and new orders were or above a 50 index mark in January, indicating greater certainty. Jobs in the trade environment have remained tight and negative, despite more employment is expected in the next 6 months as economic and trade conditions normalize, and the end of the state of disaster will ensure even more favorable trade conditions. Meanwhile, a quarterly review of South Africa's vehicle manufacturing industry and automotive sector released by Automotive Business Council shows that a total of 8.8 billion rand was invested by major vehicle manufacturers in 2021. Ford Motor Company and Toyota South Africa Motors accounted for the bulk of the capital expenditure by original equipment manufacturers. Toyota pledged to invest more than 2.5 billion rand in the production of a new passenger car at its plants in Durban, and Ford announced it would be investing 1.8 billion rand in modernizing and expanding its Silverton plant. The importance of the automotive industry to South African economy is highlighted by the 2021 Automotive Export Manual, which revealed that automotive exports valued at 175.5 billion rand in 2020 still accounted for 13.9% of the country's exports. Well, that's it on the program for this week, for today. Thank you so much for being a part of it. We'll do it again next week. I'm Ini John Mekwa. Enjoy your weekend.